If you look at all of the other tokens, Ether, Sol, XRP, Chainlink, they tend to have one dominant correlation, which is not with the NASDAQ, it's with Bitcoin itself.
Recently, crypto asset prices have fallen sharply, with Bitcoin prices dropping as much as 30% and some of the other coins dropping as much as 70%, despite what some might consider a sort of ideal environment for cryptocurrencies.
Now, cryptocurrencies since 2020 have indeed had a positive correlation with the US stock market. But what's very curious about this is that in the past year, the US stock market's been going up, whereas cryptocurrency prices generally have been falling. Yet they maintain their positive day-to-day correlation. So what's going on here is that on days when the stock market is up, crypto asset prices tend to be up, but not so much. And on days when the stock market is down, crypto asset prices tend to be down, often quite significantly.
Taking a closer look at the relationship between Bitcoin and other crypto assets will help clarify their performance as a whole.
If you look at all of the other tokens, Ether, Sol, XRP, Chainlink, they tend to have one dominant correlation, which is not with the NASDAQ, it's with Bitcoin itself. And Bitcoin seems to be encountering certain problems. First, its user network seems to have plateaued back in 2017. The reason for this seems to be that the Bitcoin blockchain is very, very slow. It can only handle 3 to 7 transactions per second. But what is interesting is that Bitcoin in some ways resembles gold. Even though it doesn't have much correlation to gold, it is still a very scarce asset. And so its appeal is scarcity.
By contrast, other crypto assets in some ways resemble industrial metals. Unlike Bitcoin, they have real-life use cases.
And those real-life use cases may cause some of these other cryptocurrencies that can be used for a whole variety of different purposes to one day become dominant in the space.